Hello, this is the panel at Dublin BIC, where we discuss the issues that matter for entrepreneurs and for early stage enterprises. Today, we're looking at what is the effect of the pandemic on the investment marketplace. If you're a business that's currently in a funding round, are there things that you should be doing in order to complete that funding round? Are there going to be particular challenges for certain sectors, or the flip side of that, are there certain sectors that indeed investors are actually looking to invest in now? To answer this and other questions, I am joined by three people who we hope have all the answers. And they are Eugene Smith, investment manager with the Dublin BIC venture funds, including the AIBC Capital Fund. John Phelan, All-Ireland Director with the Halo Business Angel Network, and Finn Murphy, Principal with Venture Capital Fund Frontline Ventures. You're all very welcome.
Cheers, Martin.
Thanks.
Gentlemen, if I could throw that question out to all of you and whoever wants to jump in, what is the effect of the pandemic on the investment marketplace right now?
Well, I think there's being surveys carried out, and as usual, there's just a gap between the perceptions of the investor and the perceptions of, say, founders. There's a lot more optimism on the founder side, and there's a kind of hang-back mentality really amongst the VC community. So I think that disparity, there has always been a disparity really between the two views, but that's coming into play now more often.
Eugene, thank you for that.
Yeah, I'd agree in that most investors are like, you know, that it's not quite the public markets are down 40%, therefore valuations are down 30-40%. I think it feels like the investment community, you know, they don't have to move. Like if you're a founder, you have no choice. You keep going or you shut down, while investors can take a much more long-term view. And right now, from my sense, in particular the VC community, is people feel like we don't yet know the impact, like the real impacts of this pandemic. Start to get more information, like even week by week, you know, you feel like you know a lot, you feel like you know a lot more than you did the previous fortnight. But we're definitely seeing is investors are happier to sit on their hands and just wait till we have better information. And I think that's the flip side of that, is that's something founders will have to come to terms with, is something that could have been, I don't think things are going to come to a stop, but a deal that might have taken 4 weeks to do in January this year is going to take 8 weeks to do, because people are just they're going to wait, they're going to want more information, and they're definitely going to want to get more comfortable with companies and their management teams before they write a check.
Very good.
Yeah, there is that, but I think we're also seeing that fundraisings that were underway have continued, and so you'll have seen Silver Cloud Health there completed the 16 million funding, and I think that shows that confidence has not been completely, you know, eroded. People are treating it and willing to treat it as, in trading terms, possibly a lost quarter, but business as usual is expected to recommence once this has passed. And I think, you know, risk capital, it's not looking for certainty, but it is looking for confidence, and that's probably the thing to keep in mind.
I suppose just from the H-band side, we've seen direct impact, I suppose, with our own pipeline of deals that we expected to close out. So we expect about 20% of them will close out as expected, and that's primarily just the nature that they were either at legal stage and the funds were about to be transferred. So they were closing anyway. So those we expect to go ahead. They typically were ready to go sort of early March. We have seen directly impacted about 30% of the deals. And what's happened there is that the deals have either been deferred and put out by 2, 3, 4 months, or the amounts being invested has been reduced by 50% in some cases. So that's quite an impact. That leaves the other 50%, which are ongoing. How they're going to be impacted, we just don't know. Some will be impacted, there's no doubt about it. So there is direct impacts.
And John, are you seeing then the valuations becoming more negotiable at the moment?
Some of them, yeah. I think there's probably a bit to go on that. I think they're probably a bit frothy anyway. Some of them are getting, believe it or not, a bit giddy about more traction at the moment, and therefore some of the valuations we've seen. I saw one going up yesterday.
Okay, so very clear messages coming from you there that we're seeing reduced valuations, delays in investment happening, and smaller quantum of investment if it does go ahead. If I am that entrepreneur who's in the middle of an investment round, thought I was just about to sign on the dotted line, that's not happening now. My investor is talking about a lower valuation, is talking about investing a smaller sum at this time. What's the top tips for that entrepreneur facing all of those scenarios?
I can give you the view from us is, if you don't have to fundraise in this environment, don't. Like, if you can cut costs and get yourself 12 months of visibility, that's the ideal outcome here. If you absolutely have to raise in the next 6 months, do it now, but be prepared to take, you know, this, like, it's a buyer's market. It's to a certain degree that the balance of power has shifted back to investors, and you know, it's really like it's a kind of, you don't have that many options. It's either, if you have to raise money, you'll take the terms on offer, and if you can, there are investors who, I think the bad behavior that people would have seen about 3 weeks ago, where, you know, there was a lot of talk of pulled term sheets, there were a lot of talk of people backing out of deals. That's not, like, if you were there, it's a really unfortunate situation to be in, but we're past that now. The initial knee jerk is over. The initial knee jerk there is over. But it's really, it's definitely, for the next 6 months, there's going to be people who can write checks as investors are going to have a lot more power than they did just 3 months ago.
Okay.
Yeah, I think the advice, Martin, would be, if you're at an early stage, this is probably a bide your time situation. If you can raise amongst friends and family, great, do that. But the best focus right now would be on refining the business plan for the future proposition, because things are going to change. I think, you know, if you look across sectors, and it will apply differently for each different sector, disruptive plays now in certain sectors are probably not going to be as popular. There's consolidation of industries that were previously regarded as marginal, and they've now become mainstream. So I think anybody writing their business plan has to factor these new eventualities into the plan, and this is a good time to do that. In other words, it's a good time to come out of the blocks more intelligent than the other business plans that are constantly trying to raise at the moment in a difficult environment.
And rewriting that business plan typically involves accepting much lower sales forecasts, much longer sales cycles, reducing your costs, doing everything you can to make sure there's still cash in the bank to keep the doors open for when the upturn comes.
And also, I think, to have a devil's advocate. So I think that's a role that DublinBIC can perform. And, you know, each company out there that it feels it has a good idea, you know, it's no cost to contact DublinBIC and have an engagement with one of the consultants to just see if this is going to run or not.
Yeah, I completely agree with you. And we are having those engagements with our clients in DublinBIC. And, you know, I've been there myself. It's very hard for a first-time entrepreneur to fully take on board everything that's happening here and fully address the tough decisions. So we are helping them with advice around that. John, you were going to come in there.
I think the most important thing is to be here in 6 months. I mean, that's it.
Yeah. Okay. Is there a flip side to this? Are there certain sectors, certain types of business that investors are actually going to be chasing now?
I can probably, we have a view, you know, do not go out and pitch investors telling them that it's a great time and this is suddenly your new, like, this is bad for everyone. It's less bad for some people and more bad for others. There will be opportunities on the flip side of it. Like, you know, if you're starting like trying to build the business to capitalize on the opportunity right now, you know, remote working, like remote payroll, there are already companies that are much better positioned than you that are going to seize on that opportunity. So like people saying like startups in particular, very early stage companies, the opportunity for you isn't the current situation, it's what's happening next year. And like we don't yet know what the fallout of that will be. So I think like there are industries where, of course, like travel, you're completely screwed. Like hospitality, it's pretty touch and go. There are more sectors that, you know, but like everyone we know, it's harder to book calls in, it's harder to get decisions made, it's harder to get anyone to commit to anything long term. So I think like right now, entrepreneurs in our view should be like, don't try to pitch your product to how the world is right now, because this is very much so temporary. Like it's trying to think about how the world is going to change in, you know, whatever it is, 12 months time. That's maybe a more compelling pitch to be making right now, but it's definitely not, it's less bad for some people, but I still think it's pretty bad for everyone across the board.
Yeah, I'd agree with that, Finn. However, just not to put a damper on everything, there are, when we do look at opportunity, and it is going to be 2021, those technologies can be in development now. And it's probably in areas like, what I would be keen to look at is the combinations of IoT with other technologies such as monitors and the effective removal of privacy. What we've seen in a pandemic is the almost absolute right of a nation or a state government to impose certain technology solutions. And those will become part of a new reality now. So, for example, identifying clusters, those are technologies that can translate into other, say, consumer behaviors. And they are happening now. So, and they are evolving. And when I look at, you know, drones flying up and down UK streets telling people to go back into their houses, we're not that far from the unmanned autonomous drones. The technology that has to be developed there in terms of leader drones and attack prevention on drones. So, you know, I think for the research type engineering, electronic engineering approach, there's very good work that can be going on now to get a good hearing in early 2021.
And just from our side, I suppose, Martin, we're saying, I know some companies I'm involved with, the online learning space has gone bananas in the last month. Just subscriptions have doubled. I have another company which is involved in the construction software space, and they're now dealing with the large software providers of construction software and hardware who are saying that we need this in 3 to 6 months' time, because in 3 to 6 months' time, all the governments globally are going to be opening up their purse strings. And the first thing they're going to do is infrastructure, which means construction-wise, we need this software in play in our stack so that our customers can do what they need. And we're willing to pay for that now. So I think there are some definite sectors which are doing okay out of this. It's not bad for them. But like Finn said earlier on, there's a lot of carnage out there as well.
Yeah, and it sounds from what you're saying that it's an opportunity for the scale up rather than the startup. Somebody who's already in there, has the product, you know, has some traction in the marketplace, and this is an opportunity for them maybe to do more.
Well, yeah. Let's not forget as well that, you know, it's 10 years since the last, you know, economic downturn at a, you know, similar level of severity. And coming out of that, say 2009 saw, you know, a bounce in seed capital investing. Maybe, you know, that reflected that other investment areas were not attractive. and seed was like a port in a storm. So, you know, I think it will be interesting to see what happens out of this. But if if a recession is looming, seed is always offering a home for the risk capital.
So that brings me neatly into perhaps my final topic for you. When we come through all of this in 3 months' time, or hopefully not too much longer than that, are we into, cliche alert, a new normal? What's the investment marketplace going to look like? For instance, are we going to have many people who are currently made redundant who are going to be starting up businesses? And is there going to be a renaissance of entrepreneurialism? And what will the investment look like to meet that? And any thoughts on that whole subject?
I think you're going to see some more conservatism on the investor side, not in terms of risk taking, but in terms of investor models. Coming into 2020, there were already new models evolving where investors were not actually taking equity and were willing to wait until there was a top line profit in the company, and they would share in the profits. I think those models might be just jeopardized now, and there will be a return to the safety of the tried and trusted mechanisms. However, with one exception, I think what I've seen over the past 3 or 4 years is that crowdfunding, it started off with, a kind of a more kind of shabby outlook about it. It was regarded as a last resort. But it has gained some aspect of being respectable, and it's not unusual now to see crowdfunding in the early stage paperwork of a company.
Yeah, I think there's probably 2 parts to this. I think like alternate funding sources, like the investment market itself is probably going to get less frothy. Like investors are going to, particularly for the next 12 months, are going to want to support their existing companies. And if those, again, is the opportunity here for scale-ups or for startups, it's like there's probably a fine line between companies that are not quite at scale. There's a kind of zone of death between startup and scale-up that I think a lot of investors, or if you have portfolio companies there, you're looking to support them through this particular point in time. So I think there's probably going to be consolidation with investors making fewer larger investments, or doubling down on their existing portfolio. But I think it's hard for anyone to sort of, there's so much dry powder. In the last Q4 of last year, there was something like €4 billion in new fresh venture capital in just in European focused funds. And so I think as long as we avoid complete economic collapse and you can keep your business alive for ideally 12 months, but at an absolute minimum 6, I think there will be opportunities for both investors and entrepreneurs to kind of go at it in whatever the new normal looks like once this is over.
I suspect, Martin, that your observation that there's going to be a lot of new entrepreneurs coming out who were made redundant, that's probably going to ring true. And I don't think that's a bad thing. I think that's good. And then the flip side of that, people who invest in them, as Finn says, there is a lot of dry powder out there. And once the confidence comes back into the market that you have some really good people, some really good ideas with real opportunity and potential, once the institutional side of it starts bringing a bit more cash back to the table to give that confidence, the privates will definitely come back as well. But I also would like to see some policy changes. So I think EIS has to change. I think it has to be fit for purpose. I think we possibly have to look at a 60% tax relief for this year just to get them encouraged to come back in, possibly even ahead of the institutions.
Very good. Okay, gentlemen, if I could summarize some of the great insights you've given us there. The investment marketplace activity is down. The investment cycle is being lengthened. The investment quanta are being reduced, and there's a lot of stuff that's not happening. If as an entrepreneur, as an early stage business, you can hold off on looking for investment right now, you're better off. And that may require some re-engineering of your business to make sure the doors are still open or can reopen in 6 months' time when this is all over. You think that after it's all over, that it'll be a more conservative marketplace, that some of those alternative funding sources might have gone the way of all things, and we'll be back to more traditional investment. So I think they're great insights for any entrepreneur to have as they go through the investment journey right now. I'd like to thank you all. Eugene Smith from DublinBIC, John Phelan from Halo Business Angel Network, and Finn Murphy from Frontline Ventures. Thank you very much for your insights, and I hope to talk to you again very soon.
Yes, thanks
everybody.
Good luck out there.
Good luck. Be safe.